Today I'll explain class 11 accounts, chapter bills of exchange. What is bills of exchange? Bills of exchange is an unconditional written order from one person to another to pay a specified sum of money to a designated person. Yes, what does it mean actually? Suppose a person has purchased goods from another person. Okay, suppose if I take two names, Rohit and Rahul. Rohit has purchased goods from Rahul. Okay, on credit. So Rohit has to give the money to Rahul. Okay, as Rohit has purchased goods from Rahul, so Rohit has to give the money to Rahul for the goods he has purchased. So what is happening? Rahul is drawing a bill. Rahul is making a bill of exchange. Okay, Rahul is the drawer. He is making a bills of exchange, and he is asking Rohit to sign it. Okay, who has purchased the goods? Okay, he is asking him to sign that bills of exchange. Okay, when Rohit is signing, okay, it means that Rohit is undertaking that in future at a certain date he will give back the money to Rahul. Okay, bills of exchange is mainly made by the seller, the person who is selling the goods. He draws a bills of exchange on the buyer. Okay, and the buyer has to sign it and accept it. Okay, when the buyer signs and accept it, it means that in future whatever the bill date is, the due date, on that date the buyer will pay the specified sum of money to the holder of bills of exchange. Okay, this happens. Basically, bills of exchange is what? It is an undertaking to pay a specified sum of money in future to the holder of the bill. Okay, now drawer. Who is the drawer? Drawer is the person who makes or writes the bills of exchange. So I've explained, like seller who is selling the goods on credit to the buyer, he is the drawer. He will make a bills of exchange and ask the buyer to sign it and accept it. Draw is the person on whom the bills of exchange is, the buyer. Okay, on whose name the bills of exchange is made. Okay, who is asked to sign and accept it. Okay, draw is the person. Next one process is there in bills of exchange, endorsement. What happens in case of endorsement? Suppose seller has asked the buyer to sign the bill of exchange, accept. Okay, and buyer has accepted it. Okay, after that seller can use that bills of exchange to make payment to his creditor. Okay, the seller can give that bills of exchange to any other person, a third person. Okay, in payment of the dues. Okay, the endorsement is a process which bills of exchange transfer to a third party. Okay, two parties are there, seller and buyer, and in endorsement one more party is involved, that is known as endorsement. Okay, seller is transferring the bills of exchange to third person. Who is endorser and who is endorsee? Endorser is the person who is transferring the bills of exchange, and endorsee is the person who is receiving the bills of exchange from endorser. Okay, now we'll be moving towards some journal entries. Okay, here are some journal entries. Yes, entries in drawers book. Yes, so what entries we'll do in drawers book? Drawers here means the seller. Okay, so first entry is what? For sale of goods on credit. Okay, when the seller is selling the goods on credit, what entry will do in his book? Simple, the receiver's account debit to sales account. Okay, receiver means the customer who is purchasing a good, his account debit to sales account. This will be the entry for sale of goods on credit. Second entry, when the drawer means the person who is making the bill, he will make a bill and ask the drawer to accept it. Okay, so second entry will be bills drawing or accepting entry. Okay, bills accepting entry. What is the accepting entry in the books of drawer? It will be bills receivable. Okay, bills receivable account debit to customer account means who has purchased goods. Okay, why bills receivable we are using? Because the seller which bill he is holding, he will be receiving the money now, so that is bills receivable. Okay, he is a debtor. Okay, he is having a bill for which he will receive the money in future, that is referred as bills receivable. And bills payable is what? A liability which you have to pay. But here the drawer is the seller who will be receiving the money in future at a certain date. Okay, so bills receivable account debit, as it is an asset, to the person who is giving, who is accepting that bill, signing it. Okay, that is the customer means the buyer. Okay, next entry in draw is book. Okay, draw is the person who has purchased the goods. Okay, so when a credit purchase, okay, when draw is purchasing the goods in credit, what will the entry pass in his books? Purchase account debit. Okay, expense, purchase account debit to supplier account, who is supplying the goods on credit. Okay, purchase account debit to supplier's account means the seller. Next, when drawer will give acceptance to the bills of exchange which the drawer has made. Okay, drawer has made the bills of exchange and ask the drawer to accept it by signing. Okay, the drawer is the buyer, the drawer is signing that bill. Okay, drawing is actually, drawer is a debtor and drawer is a creditor. Okay, so here what will happen? Drawer will sign the bills of exchange and he will return to whom? He will return to the seller. Okay, so supplier account debit to bills payable. Okay, in Droy's book we are writing bills payable. Why? Because Droy is a creditor. Droy has to pay the money to the seller. Okay, so here bills payable, it is a liability for Droy to pay the money. That's why we are using the word bills payable. Okay, so when acceptance of bill is given, what entry will pass in Droy's book? Will pass the entry supplier account or the seller's account debit to bills payable account. Next, on maturity, okay, means on due date, what entry? The Droy has to pay the money on due date to the seller. Okay, so what will be the entry? Bills payable account debit to cash or bank, whichever mode you are using, cash or bank account. Okay, bills payable account debit. Okay, liability is decreasing. Okay, it will be debit. Bills payable account debit to cash or bank on due date. Okay, this entry will be passed at the time of maturity in the books of Droy. Next, we are moving. The holder of the bills of exchange has the following option. Yes, means the drawer has the following options. Okay, regarding the bill, the drawer can retain the bill till the date of maturity. Okay, first case, the drawer means the seller can keep the bills of exchange with himself. Okay, till the date of maturity. He will keep the bills of exchange with him till the date of maturity. For that, what entry will be passed if he is keeping the bills of exchange with him till the date of maturity? Simple entry will be passed in drawer's book, that is cash or bank account debit, as he is receiving the money on due date from the buyer. So cash or bank account debit, and bills receivable will be credit to bills receivable account. Okay, bills receivable account. Okay, second case, if suppose, yes, here we are seeing one word, discount the bill with the bank. Yes, what happens? The holder of the bill, okay, means the seller. Okay, he got the bill accepted by the buyer. Okay, and basically bills are drawn for 2 months, 3 months. Okay, some time period is given. Okay, but if the seller needs immediately money, okay, if he needs urgently money, okay, he is in need of money, what he can do? He can take that bills of exchange to the bank, and bank will discount that bill. Okay, bank will deduct some charges, and bank will pay back the cash to him. Okay, bank will keep that bills of exchange with itself, and bank will deduct some charges, that is referred as discounting charges, and bank will provide the cash to the seller. Okay, means the holder of the bill. So in that case, what entry will be passed when you are discounting the bill with the bank? That entry will be passed only in drawer's book, not in Droy's book. Okay, because the bill is with the drawer, and he is taking that bill to the bank and asking the bank to pay in the cash. Okay, by discounting. So in that case, bank account debit, you are getting the money from the bank, to bank account debit. Discounting charges account debit, because it is an expense which bank is deducting. Okay, to bills receivable account, because bills receivable is going from you. Okay, so bank account debit, discounting charges account debit to bills receivable account. This entry will be passed when the drawer is discounting the bill with the bank. Third case, what happens? The holder of the bill may give the bill to another person, which is known as endorsement. I have explained in the first page. He may endorse, means the holder of the bill, he may give that bills of exchange to some other person, third person. In that case, what entry will be passed? Endorsees account debit, means to whom you are giving the bills of exchange, his account debit to bills receivable account, because bills of exchange, bills receivable is going away from you. Okay, to endorse the bill. Okay, when you are giving the bill to a third person, endorsement process is taking place. In that case, in the books of holder, what entry will you pass? Endorsees account. Okay, means we will write the name of the person to whom you are giving the bill. Endorsees account debit to bills receivable account. Okay, fourth case, you can send a bill for collection to the bank. Okay, you can send a bill for collection to the bank, and bank will collect the payment on due date. Okay, you are not keeping the bills of exchange with you, and you are asking the bank to collect the bill payment on due date. Okay, then you are sending the bill to bank, then what will entry will pass? First, bill sent for collection account debit to bills receivable. Okay, bill sent for collection account debit to bills receivable. This entry will pass when you are sending the bills of exchange to bank for collection. Second entry will pass on due date, when your bank is realizing the amount, when bank is getting the due amount on the due date. Okay, so in that case, what entry will pass? Bank account debit. Okay, you are receiving the money in bank, bank account debit to bill sent for collection account. Clear? Next, endorsee's book, means the person who is receiving the bills of exchange, endorsee. Okay, so when he is receiving the bill, okay, what entry will pass in his book? Entry will pass bills receivable account debit to endorsee's account, bills receivable account debit to endorsee. Here it will not be endorsee, it will be endorser's account. Okay, means who is giving the bill. Okay, endorser, who is giving the bill to him, endorser. Okay, when bills, yes, endorsee is the person who is receiving the bill, okay, from the drawer. Okay, so when he is receiving the bill to bills receivable account debit, who is giving the bill? Endorser, to endorser's account. Okay, And on due date, when the bill is honored on due date, what will be happening? He's getting the money to bank account or cash account debit to bills receivable account. As entry we do for maturity payment received, same entry we are doing here. Cash or bank account debit, you are receiving the money to bills receivable account. Okay, these two entry will pass in case in endorsee's book. Next, we are moving to entries on dishonor. Suppose on due date the drawee failed to make the payment. Okay, bill got dishonored. He is not able to make the payment on due date. Okay, then what will happen? See, various cases are there. When the bill is retained by the drawer till maturity and dishonored. Yes, on till due date. Okay, the drawer has kept the bill with him and it got dishonored. Then what entry will pass? Drawee's account debit to bill's receivable account to cash or bank account. This entry will pass. When bill is retained by the drawer is keeping the bill with him till the maturity date and the bill got dishonored on due date, entry will pass drawee's account debit to bill's receivable account to cash bank account. Cash and bank account is the noting charges, extra charges for dishonored. Okay. Next, when the bill is discounted with the bank, and yes, suppose the bill you have discounted with the bank and then it got dishonored, so in that case, same, drawee's account debit and to bank account. Drawee's account debit to bank account. Okay, from bank the bill is getting back to the drawee. Okay, just the reverse entry. What entry we used to pass for acceptance? Just the reversal entry. When the bill is endorsed, suppose the bill was endorsed to endorsee and that it got dishonored, then same, drawee's account debit to endorsee's account. Drawee's account debit to endorsee's account. And when the bill was, suppose when the bill was sent to collection, okay, there was a case now when you are sending the bill to bank for collection, so in that case, drawee's account debit to bills sent for collection account to cash or bank account. Same here, cash or bank account will be the noting charges. Okay. And in drawee's book, what entry will pass when the bills are getting dishonored? Bills payable account debit, you are getting back the bills payable, noting charges, which is an extra expense you have to pay, and to drawers account, from whom you are getting the bills of exchange. You are getting the bills of exchange from drawer. Okay, this is the holder of the bill. So this entry will pass in drawee's book when the bill is getting dishonored. Next, after dishonor, what will happen? You have to cancel the original bill. You have to make a new bill. Okay, so in case of fresh renewable, okay, when the original bill got dishonored, and after that what entries will be passed? First entry will be passed in drawer's book, that is cancelling the original bill. Okay, for cancelling the original bill, drawee's account, what entry you have passed for acceptance, that entry will just reverse it. Drawee's account debit to bill's receivable account. Okay, this entry will pass for cancelling the original bill, okay, which got dishonored. Drawee's account debit to bill's receivable account. Second, interest due for extended period. Suppose you are drawing a new bill, extended period. Okay, more time you are taking. Okay, for that extra interest you have to pay. Okay, to interest due for extended period, what entry? Drawee's account debit to interest account. This is the entry for interest extended period. You are taking more time to pay the dues, so that's why you have to give interest. That's why drawee's account debit to interest account. This is interest due entry, not payment entry. It is interest due entry. Next, when you're receiving the payment, okay, suppose the drawee is giving some part payment. Okay, he's not giving the entire amount of the bill, he's giving some part. Okay, suppose 5,000 was the original amount of the bill, so he's giving 2,000 as cash, and for 3,000 he's giving a fresh bill to you. Okay, so 2,000 which you're receiving from the drawee, for that what entry will pass? Cash account debit, and from whom you're getting that cash? To drawee, to drawee's account. Okay, and for the remaining amount, the drawee is giving you again a fresh bill. The fresh bill, same entry what we used to pass in the beginning. Bills receivable, you are getting the bills. Okay, bills receivable. In drawer's book we write bills receivable, and in drawee's book bills payable. So in drawer's book we write bills receivable account debit, you are receiving the bill. To who is sending that bill? Drawee, to drawee's account. Okay, these four entries will be passing in case of fresh renewable in drawer's book. Whose book? In drawer's book. Okay, next, in case of drawee's book. Okay, drawee's book, when the bill is getting cancelled, drawee's book, when the bill is getting cancelled, what will be the entry? Bills payable account debit to drawer's account. Same entry which bills acceptance entry, just reversal. Bills payable account debit to drawer's account. Same in drawee's book also, interest due entry will be passed. Interest account debit is an expense. Interest account debit to drawer's account. Interest account debit to drawer's account. Third entry, part payment. Okay, part payment which you are making for the bill. Okay, part payment you are making, that will be drawer's account debit to cash or bank account. You are making the payment to drawer, so drawer's account debit to cash or bank account. Next, new bill. Okay, part payment you have made, and after part payment whatever the remaining money is left, okay, for that you are making a new bill. drawer is making a new bill and giving to you, and you're accepting that new bill. You're accepting the new bill. So for acceptance of new bill, what entry will you pass in drawers book? Drawers account debit. You are giving the bill to drawer, to drawers account debit. Two bills payable account, which is a liability. Two bills payable account. Okay. Here we have just seen a few introduction, means notes, okay, regarding bills of exchange. In the next we will be seeing the sums, okay, and when we'll go in some more things will be covering. Okay, here this video was just an introduction of bills of exchange. Okay.